Thank you all for joining in. The webinar will begin shortly in the next few minutes. A very good evening to one and all present here and welcome to today's webinar. Our Chief Investment Officer, Mr. Sunil Damania, would be providing his outlook on FII activity in Indian equity markets and how does the future look for FIIs in India. Towards the end, we'll also be having a short Q&A session where you could simply drop in any questions you have in the chat box and the Q&A section. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very warm welcome, all of you. I think we are all concerned about why FII is selling and when will FII will come back to Indian equity market. Unprecedented sale by FII in last few months. So what is the reason? Why are they selling at the first place? Is it really something wrong which we as an Indian investors are not able to visualize with the Indian equity market, and hence, but FIIs are able to see, and hence they are selling, and they are a little smarter than us, and hence they are selling? And if yes, when will they stop selling, or should we expect more selling from the FII in the coming months? So I'm going to discuss all this in this webinar, and please feel free to ask any question that bothers you. In a very dear friend of mine, and he would always look at how much FIIs are bought today or they sold today. And for some reason, if he's outside the office, he would have instructed his staff to please share the data. And in fact, if you ask me what FII bought or sold, I don't have any idea, to be very frank, with on a daily basis. Only thing, when I look at the data, when I do equity outlook, the first day of every month. Otherwise, I don't look at, and in fact, I look at data today, and I'll explain you why I don't look at FII data. So for some reason, if you are going to take your investment decision purely because of whether FIIs are buying or selling, I'm afraid you will not make money. You would not be a very successful investor. And hence, I don't give too much importance of what daily activity of FII. Of course, you should know as an information over instead of daily, over a longer period of time, how FIIs are buying and selling. But should you give too much importance? My answer is no. And I explain you why. And if you don't agree with me, I'll be more than happy to have a discussion on that. But before I begin my webinar, just a small disclaimer that this webinar is only for an education purpose. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance is no indicator of a future performance. So let's look at what happened with FIIs book. FIIs are on a selling spree. 2,45,000 crore from October till June. 9 months in a row, FII has been selling in Indian equity market. And if you look at, this is a continuous FII selling. Every month after month, FII has been selling. The previous best or worst, whatever you want to put it, was in 2008. We all know, because when there's a financial crisis happen, the global finance crisis, they sold. But they sold 7 months in a row, only 44,000 crore. In March 2020, when this corona hit us, everyone, FII in 2 months sold 68,000 crore. Much higher than what they sold in 2008. But from October 2021 till June 2022, 9 months in a row, they sold 245 lakh crore. And if you look at the 5 consistent period of selling by FII, if you combine this 5, it's much lower than what FIIs have sold in 2.45 lakh crore. And I'm just trying to wonder what is wrong with India. 2020, I can understand. There was a virus. No one knew what's going to happen. And there was a panic selling. I understand that. 2008, I understand, because there was a global financial crisis. But what is much higher than Omicron or the virus or the global financial crisis that making FII selling very heavily. And what that FIIs are able to see, we Indian fund managers or Indian retail investors are not able to see. I'm trying to address that in my presentation. So jot down 9 months in a row, 2.45 lakh crore FII sold. And what happened because of that? FII on an average owns the about 20% of India Inc., which has come down to, for the month of June, for the month ended May, 18.2. For the month of June, it would have further come down. Why? Because FII have been constant sellers in the month of May, or for the month of June also. So this is what has happened. And what has happened, who has increased the stake? Body corporate, that's promoters. Who has increased the stake in this period? I've taken from September 2021 till May 2022. The reason I've taken that, because we don't have data for June, so I've taken May. The reason I've taken that, why? Because September 2021, because from September 2001, that is from October, November, FII started selling. So what severe? So who has increased the stake? Individual investors like you and me, HNI investors like you and me have increased. Body corporate, that's the promoters, have increased the stake. Mutual fund has increased the stake from 7.4 to 7.7. Even NRI, who are outside India, increased the stake from 1% to 1.1%. But FII have reduced the stake from 20.4 to 18.2. I must tell you, I have been looking at some data points. This is the first time FIIs are below 19% of India in last few years. They've always been commanding more than 20% of India's overall market cap and owning near about 20% market cap. But their stake has come down to now 18.2. And I must tell you, it would have further come down as I speak to you, but the data is not available in the public domain. Now the question comes, why are these FIIs selling? Is there something wrong with India? So when I looked at it, how FIIs are looking at across the emerging markets. Is India is an outlier in that sense, or we are seeing selling across many markets in the world? But if you look at it in last 12 months, India seems to be an outlier with South Korea. Why? Because they sold near about 24 billion US dollar in last 12 months, while 18 billion with the South Korea. South Africa is another market where they sold very heavily, and the Taiwan, which is about 30 billion US dollar. And Taiwan, for the right reason or wrong reason, because of uncertainty relating to the China and so on and so forth, they have been heavy seller. And Taiwan is a very big market in terms of market cap. Other places, if you look at Indonesia, Brazil, Thailand, Malaysia, they have been net buyers, but the amount has been 4 billion or 6 billion or one, But overall, if you look at, FI has been selling in the emerging markets. So which clearly gives an idea that, yes, they have sold in India, but India is not an exception. I think it's part of the emerging markets. So I don't see any India-specific issue which is making FIIs selling in the Indian equity market. It looks like more like an emerging market issue. And the reason is very simple. The rate of interest is moving up in the US because of higher inflation, and we saw that 75 bips rate hike from Fed. There are more rate hikes is going to come. And as and when the rate hikes comes, there is a tendency of an FII to move from emerging markets to the US market and the developed market. That's one reason. Now, how long that continues, we need to wait and watch, and I'm going to cover that based on my understanding. And that's why they're selling. And second thing, we have seen that whenever the rate of interest suddenly goes up in US, the currencies comes under pressure for temporarily, not necessarily for a longer period of time. And that's what exactly is happening right now. And that's the reason we see FIs are selling in the emerging markets, and India is a part of that because India's market cap is much substantial, and hence they would look at the liquidity of that. So where would the FIIs have sold? Now, I've looked at the Nifty 50 companies first, and I'll say overall also where have they sold. So what I've looked at it, if you look at it, there are more like a banks. If you look at the where FIIs are sold very heavily in Nifty 50, IndusInd Bank, Axis Bank, ICICI Bank, HDFC Bank, where FIIs have sold very heavily. When you look at the financial, say this one, HDFC Life Insurance, HDFC Bajaj Finance, they have sold very heavily. And due to that, we have seen some decline also in the prices. But despite FII selling heavily, the maximum loss that has happened is in Ultratech Cement. It's down by 28.7%. While company like Hero MotoCorp, where they sold, in fact, Hero MotoCorp YTD, that is in 2022, it's in a green. So the FII selling in Nifty 50 companies, the maximum loss that has happened is 28.7% with Ultratech Cement. Now let's look at where FIIs increased the stake maximum. Hindalco, they've increased the stake, but the fall in the price is minus 33%. On one hand, where FII decreased the stake, the maximum loss has been 28.7%. But Hindalco, so sometimes we try to wonder, is this the fall in the market purely attributable to the FII selling? Well, sometimes the answer is no. It could be other factors which could also result into a underperformance of a company. And there are, look at out of top 10 companies, 6 companies these are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Out of 12 companies, we see 8 companies FIIs have increased the stake, but the scrips have fallen. The scrip have fallen. And wherever the stake has been very minuscule, like ITC, which has gone up by 21.7%. So sometimes do not come to a conclusion because FIIs are selling and hence the scrip is going down, and vice versa. Something similar happened where we have looked at company having market cap minimum 5,000 crore, and this is this data is from September 2021 to March 2022. This data would have further, there would be change. Why? Because till June, they have been heavy sellers. Am I right in the Indian equity market? But unfortunately, we get data only quarterly. So hence, I look at the data this way. If you look at over change December 2021 to March 2022, these are the companies where FIIs have increased the stake. But very few companies you will say like Hindalco that they've increased the stake, Cipla they've increased the 2.29%. But most of the stake that have increased has happened in small and mid cap. And Brightcom, where they've increased the stake, but we all know Brightcom, how volatile this company has been and how severely the price has taken a beating of the Brightcom. Same way where FIIs have decreased the stake substantially, Escort is one, maybe because of this open offer that could have triggered for them to do that. And then Metropolis, Jubilant, Motherson Sumi, Manappuram, 197, M6, and so on and so forth. Now, where would the FII normally? So if you look at FIIs, normally invest in a large cap, but the mid and small cap has fallen substantially. Am I right? In 2022, in 2022 YTD, mid and small caps have fallen substantially. So should that be also a function of FII selling? The answer looks like no. Because if you look at the FII holding, top 30 company accounts for 64% of their total holding. The moment you go from 31 to 100, that's additional 22%, which in other words, 86% of their holding is in top 100 companies, which are normally large cap companies. And only 14% of the stake is into 101 to 500 companies. So, and if you look at the retail investors, we would have more stake in the 101 to 500 companies. and we would have only 45% stake in the large cap versus 64% of the FI. If that's something similar we have seen, even domestic mutual fund would invest heavily in large and mid cap, and so is the case with insurance companies. So that's where they change. So then how does one explain the fall in the small and mid cap? I think that's more to do with nothing to do with the FIIs, and most of us have more exposure to the mid and small cap as compared to the large cap. Am I right? Now let's come to the very interesting data. Where was the FIIs take highest exposure as I speak to you? Reliance, followed by HDFC. This is an absolute value of record. HDFC Bank, ICICI Bank, and top 50 companies accounts for 50% of FI holding in India. So it's very concentrated. Top 15 companies accounts for 50%. And if you look at this data, top 30 is 64.4% holding in this. And where is this FI been selling this stake? Mainly into financials, that is banks and NBFCs and the software. They have sold majorly into these two sectors. So this data I compiled on 30th September versus 15 June 2022. This data is available as late as 15 June 2022. So this sale has been more concentrated, and rightly so, because they're holding also very substantial in that. On the contrary, they have increased the stake in oil and gas company, automobile and auto component companies, to some extent pharmaceuticals and utilities, and to some extent metals and mining. But we all know metals and mining have come under heavy selling pressure. And today also, I think metals and mining sector was substantially down. So again, I want to make you understand, not necessarily when FI has a buy or sell, there would be a substantial impact, because the data doesn't suggest so. There are other factors which will decide which way the price or the market cap of the sector will perform. Now, why FIs are selling? And I think that's where I would like you to spend some time here, and because I want to make you understand. So, FIs have various kind of colors of FIs are there, am I right? There are some are long only, like pension funds, sovereign wealth fund, entity which is controlled by the government related entities, and the central banks. They are normally long only. They are very sticky money that comes to the country like India. They don't basically buy and sell. They don't change their opinion on the company very often. And then there is something called ETF, that exchange traded fund, which is very hot money, and which is a function of what happens to the underlying money, underlying redemption pressure in that fund. You know, some of the leading ETF funds which take exposure to Indian market, like Vanguard FTSE Emerging Markets ETF, having near about, this I have converted into a rupee, near about 8 lakh crore, and India's weightage is 15.7. MSCI India ETF fund, 100% India's weightage. MSCI Emerging Market Asia ETF, very small size, 4,700, but India's weightage is 16.5. And then MSCI Small Cap, MSCI India 50 ETF, and so on and so forth. Invesco is another very big fund. MSCI Emerging Market UCITC ETF, near about 2.5 lakh crore, where India's weightage is 13%. Now, why it is very critical for us to understand that? See, if it is an ETF fund, they are bound to follow the mandate that sector weightage is there, country weightage is there. So if they get more inflow, for example, Vanguard FTSE Emerging Market get more inflow to the fund, out of the $100 they need to at least invest 15.7% into India. And then, of course, they will go company-wise and so on and so forth. That's how it works. But that money should come to. At the same time, that money goes out of that redemption is there, they'll be forced to sell. If there is a redemption of $1 lakh US dollar, they will be forced to sell 15.7% of that $1 lakh from the Indian market. Why? because that's what the weightage. And if you don't do that, the weightage will undergo a change. Of course, some fund managers do apply their discretion and underweight or overweight marginally to the country weightage. Now, the sale that we have seen in the FIs, India's FIs in India, purely because of this ETF funds. I again repeat, it's almost 77% of the money that comes to the Indian equity market through FII is an ETF money, which we call it hot money. And sometimes they don't have any view on the market or on the country, but they've been forced to sell because of redemption pressure. So if you as a fund, if you are a retail investor and you decide you are invested in that one of this ETF, you are resident outside India, and you decide I want to put more money, so I want to take out money from emerging markets and I want to put money in US market, what would you do? You will say sell from emerging markets, park more funds into the developed market. And that selling pressure forced that fund manager to sell in India. That's what is happening right now. That exactly has been happening right now. And hence, the sale that has come in Indian equity market is more to do with the ETF, hot money, not from pension fund, not from sovereign wealth fund, not from the entity where more than 75% is controlled by the government or the central banks. And that makes me less worried. I would be more concerned if pension funds start selling in India, from India, or sovereign wealth, because that clearly gives an idea there is something fundamental change in the story of India, which has not been the case as we speak. Okay, so I think this slide is very, very critical. Remember, the money that is going out of India is more of an ETF funds, not fund which is long only. Of course, there will be some selling pressure. I'm not denying on that. But the selling pressure of 2.4 lakh crore that has happened in India purely because of the sovereign, purely because of the ETF, which is hot money. Now, the beauty with the hot money is that the quickly it goes out, equally quickly it will come back, and it can come back. And that's the beauty about that. वो पैसा जल्दी जाता भी है और जल्दी आता भी है. So now I'm saying FIs will come back very strongly. Why will it come back strongly? And I'll explain you why. You may think I'm a little biased and you can hold me accountable if it doesn't happen. But I strongly believe FI will come back soon. And I want to harp on this word soon. Why? And I'll explain you why. Let me look at first. So if you are a fund manager, you will always chase growth story. Am I right? Because that's what your mandate is. Your mandate is to generate alpha. And how can you generate alpha? By investing either in a company which is going to grow or a country which is going to grow. Simple logic, am I right? So the way you invest, do you invest in a company which is not going to grow or sector which is not going to grow? The answer is no. And same logic, even the international fund manager applies the same logic. Now, if you look at India, India is expected to grow more than 7% 2 years in a row, 2022 and 2023. This is a prediction given by World Bank. It's not my data. Okay, let's look at some of the other countries. US 2.5, I doubt that is going to happen. In fact, they are going to see a recession. That's what my understanding is. Japan 1.7, 1.3. China 4.3 looks doubtful. Goldman Sachs very recently came out with 4%. And there was some, I'm not able to recollect now, when someone came out with the data that in China will grow only at 3.5% in 2022. And Eurozone is going to struggle. Now, what does this mean? Well, this means that India would be among the fastest growing economies in the world. And if that is so, sooner or later, FI has to take notice of this and they'll be forced to come to Indian equity market. So whatever they've sold, they'll be forced to buy back those. Of course, not necessarily where they've sold, they will buy back. They may try to search new theme, and that's going to happen. So if you think that banks, where they've sold heavily, they are going to buy back, answer may be no. They may basically look for new sector to drive the growth for them. That's a point number one. Point number two, we all concerns about how Indian equity market do. Can a fund manager can ignore for a long period a market which is outperforming as compared to the US? Can you ignore? Have you ever ignored a sector which is outperforming and it's not there? You tend to chase that, am I right? Something similar will happen with FII fund manager also. Why? Because if you look at YTD, Nasdaq, S&P and Dow Jones are down in 16%. Nifty and Sensex are down by 11%. And if you add 4.8%, which makes it India, even in dollar terms, outperformer. Same way, you expand the time horizon in last 1 year. This has been a decline in the US indices versus Indian market. Nifty and Sensex is down only by 2% and 1%. And you add 5% additional of the US dollar rate, still Indian market has outperformed versus the US market. Now, one is that India being the fastest growing economy, and at the same time, Indian market, despite the volatility and despite heavy selling pressure from FI, continues to be the better market and outperformer as compared to the US market. So fund manager eventually will have no other choice but to park. I will give a very classical example. I'm talking about this is 2014, 2015. And I was looking at Reliance Industries, and it was a classical example. You can look at the data which is available all in public domain. And at that point of time, Jio got launched. So I'm talking about when the Jio got launched. And Reliance started outperforming very significantly at that point of time. And most of the fund managers were under-owned in the Reliance Industries. So I spoke to 3 fund managers of AMC at that point of time. And what do they say? Even if you don't want to invest in Reliance Industries, we'll be forced to invest. Why? Because our scheme will underperform. If Reliance is outperforming, and if you don't have Reliance, our scheme will underperform. And if our scheme underperforms, there'll be redemption pressure. And no fund manager would love to have redemption pressure and underperformance. Am I right? And hence they said we'll be forced to buy, and that's what exactly has happened. If you look at it from that, each and every AMCs increase their exposure to Reliance Industries. Okay. Now, Reliance was a company, same way India is a country. Assume that for FIIs, India is one of the company. And if India is outperforming, sooner or later, they will have no other choice but to increase the allocations. Otherwise, this scheme will underperform. If the scheme underperforms, investors will ask for redemption. No fund manager wants to do that. So that's the reason number 2. Reason number 3. Now, it's a very interesting data I have done. What I've done, I've looked at FIIs inflow or outflow every year and what happens to the Sensex. And what I was really surprised, that, sometimes the FIIs must have sold, like for example, 2018, they sold, but the market was in green. Am I right? And FIIs have bought this one, if you look at 17,000 2015, but Sensex closed in the red. Now the highest gain, the highest amount that FIIs have sold, invested in India was in 2020, 1,70,000 crore. Did it move the needle too much of Sensex? No, it's moved up only 15.8%. And right now, so in 2011, FII sold only 2,700 crore. This number I'm talking about. But the fall was 25%. 25%. This time in 2022, they sold 2 lakh crore, but the decline is only 9.8%. That's point number 1. So again, the correlation I'm talking about. Number 1. Number 2, note what we have observed. Whenever there has been a FII selling, in one calendar year, the next calendar year, FIIs have invested more than what they've sold. That happened in 2008. They sold 52,000 crore. Next year, they invested more than 52,000, positive 83,000 crore. 2011, they sold 2,714. The next calendar year, 1.28 lakh crore. In 2018, they sold 33,000 crore. Next calendar year, 1 lakh crore. Something similar will happen very soon. FI cannot keep selling. They have to. The trend suggests that they are not very long. They are not constant sell in the Indian equity market for a longer period of time. And this is what the data suggests. And also the data, I have looked at it. Again, I say, sometimes, we start assuming that if FII sell, market has to go down. And, very recently it happened, March 2022. FII's highest sale in a 1 month was happened in March 2022, 41,000 crore. But the Sensex closed in the green, 4.1%. यानी कहने का मतलब ये कि FI ने सेल किया मतलब मंदी है, and FI ने इन्वेस्ट किया तो तेजी है. That is not necessarily be the right way to look at it. Am I right? Of course, today FI has been heavy sellers. And the kind of selling they are doing 40,000 crore, and even June, we are not yet completed. They already sold 40,000 crore. That gives so normally, whether it's remember, when there is an excess happens on both the side, that excess is always gives an indication that we are at the last phase of that excess. Just remember my words, and this is, you will always resonate this as and when this happens. When the market starts going up, that we call melt up. When the melt up happens, that means the last leg of bull run. When market loses, when the market starts falling very severely, that's a last leg of bear market. In the same way, if FI starts selling heavily, that gives it this is the last phase of FI selling. That's what we have seen. If you look at this last 4-5 months, last 6 months, has been a brutal in terms of FI selling. This cannot continue. That means it gives an indication that we have a very last phase of FI. And same logic applies to sector also, same logic applies to companies also. A company that moves up substantially, it gives an indication in a short span of time. That means the bull run in that company is almost likely to over, and same logic applies to the sector also. And that's what you need to keep in mind. So this is what gives me a feeling that it will do that. So why FIs will come back? Let me summarize for all of you. First, let's look at the India Inc. performance. Despite last financial year, we saw second wave of virus, and in January 2022, we saw third wave, which is Omicron. And yet, India Inc. reported substantial jump in the net profit as compared to pre-COVID, which is a normal year, was FY 2019. More than 100% jump in the net profit. Now that shows a resilience, the strong ability of India Inc. to navigate the challenges. Can FII afford to ignore that? The answer is no. Can FII afford to ignore the world's fastest growing economy? The answer is no. Can FIs ignore the valuations? Why valuations? Because on the one hand, the market is corrected. And on the other hand, the earnings have gone up. Due to that, the price to earning ratios of India has become very attractive. And when a country which is going to grow, the companies which are listed are going to grow, would FI will not chase? Of course they will sell. So, they will chase. And the 2.4 lakh crore, I think, is a very aggressive selling, which has to turn around. They cannot afford to keep selling beyond a point, because they normally the stake in the India Inc. always has been about 20%. Now it's only 18.2%. So it's also below the average. And it has to revert to its mean. And that means it has to go to 20 or above pressure, 20 or above. in terms of their stake. So they will come back and they will come up with a strong bounce back. Now, one factor that makes everyone worry, and that's my personal opinion, is the crude oil prices. Crude oil prices have been extremely on a upside. I believe that by October 2022, which is near about 3 to 4 months down the line, the price of crude will start subsiding. Of course, before that, in interim, we can expect the crude oil price to remain a little volatile, no doubt about it. And due to that, the inflation so India has an imported inflation. Why I said imported inflation? Because crude oil which we import. And when the crude oil price goes up, it basically pushes up for inflation. So that's called imported inflation. When the crude oil price starts falling down, it will give a lot of comfort level to India in terms of controlling the inflation. And that would again make India as a compelling story for FII to look at it. I strongly believe that FII in FY 2023 will have a net positive inflow. I again repeat, FIIs, which has already sold more than 1 lakh crore. Am I right? If you look at this data, it's almost 1 lakh crore into April, May, and June. Almost 1 lakh crore. I'm making a prediction in FY 2023, FII will have a net positive inflow. The way FIIs have sold very aggressively, equally strong, they will come back and invest in the Indian equity market. So our worry related to the FII is I think it's a last phase of FII selling. We should not too much bothered about now henceforth from FII. I'm not saying from 23rd June, that is today 22nd, 23rd June, FII will start investing heavily, positive. I'm not saying so. What I'm saying, the future trajectory of FII will see a reverse pattern, and in the next couple of months, we would see FIIs coming back with a strong inflow to the Indian equity market. With this, let me just remind every one of you that we are celebrating our 7th anniversary, and to come and join part of our celebration, we have a very attractive package for 14,999, which includes 2 years plus additional 3 months. I again repeat, for 14,999, you have subscription for 27 months, which works out to 550 rupees per month, less than 30 rupees per day, which is less than a cup of tea. So my request to all of you, if you want to enjoy the powerful features of Markets Mojo, where analysis of 4,000 companies, which are stock of the month, which I release every 10th of the month, which has done extremely well during volatile time. If you want to run our screener, mutual fund section, trading 80 product, please come. We are asking you only 550 rupees per month, less than 20 rupees per day. I'll request my colleague Jason to please drop the link so that you people can start enjoying all the powerful features of Markets Mojo. If you wish to extend also, you can extend the subscription in several times. With this, I'll request Jason to open the floor for question answer. Jason, can I just request you to do a very quick survey? How many investors believe that FII would be net buyer in Indian equity market in the next 6 months?
Yeah, I'll just run the poll.
Yeah. And Jason, my request to you that please pick up FII question first, and once we exhaust that, then we can take our other question, maybe sector or company.
Yeah, sure. The poll is live.
Oh, thanks a lot, Jason. I can see 62 people participating. I would love to have 100% participation. So request to all of you. हिंदी में सवाल बता देता हूं आपको. क्या आपका मानना है कि FII जो 2022 के फर्स्ट हाफ में नेट सेलर रहे थे, वो नेट बायर रहेंगे 2022 के सेकंड हाफ में? आपका जवाब 2 ऑप्शन है आपके पास, हाँ या ना. I can see 73% people participating. आप लोग सब participate कीजिए.
Yeah, around 76% are participating now.
We'll wait for a couple of more seconds and then we will conclude. Jason, if you don't mind.
Okay, I'll just conclude the poll.
Yeah, please do that. Yeah. Can you see 75% believe that FII will come back and will turn net positive in second half of 2022? Of course, 25% continues to believe that they will be net sellers. We will definitely wait and watch. And Jason, remind me to do very similar webinar on same topic in the month of November 2022. So please remember, November 2022, we'll do another webinar on the same topic and we'll see. And we will also take clippings of what I predicted and see whether how far this prediction goes right or wrong. Over to you, Jason. Let's start the question answer.
Yes, let's start. This first question by Mr. Shashidhar. Hi, Sunil. What if FIIs, the return is very weak and almost non-existent? Can the Indian market be resilient enough to survive solely depending on domestic investors then?
So I think so. So see, if you ask me, if there was no, in fact, Ms. Nirmala Sitharaman also said in a very one of the events which was there last week or so, where she said that because of Indian retail investors, they have acted as a shock absorber. Because the kind of selling that FIIs have done, had Indian investors were not there, we would have seen many this. But remember, it's not only the FIIs have sold. I think I do get a sense that a lot of retail investors also locked in some of the profits from Indian market. That's one of the reasons we saw some corrections in the prices. So I believe, yes, that Indian equity investors will act as a shock absorber as and when FIIs are selling in this. But I think more the larger point is that if FIIs turn positive and Indian equity investors continue to remain net investor, it will really give a lot of fillip to the market. And then the indices will bounce back so strongly that you and me cannot imagine. Am I right? Because then both the engine will start firing. Right now, only one engine is pulling all the load, and the second engine is not basically, in fact, it's basically pulling it down. It's creating as a pulling it down. And that's why market is finding this some kind of resistance. But if FII and retail investors both start investing in positive, it will propel Indian indices very, very high.
Okay, I'll move on to this next question. This is by Mr. Rohit. And I like the question. He says, Marcus Mojo says institutional investors know better than us. So should we sell as they are selling continuously?
So did I mention that institutional investors do better than us? I don't think so. In fact, I can give you many examples after examples where institutional investors they invested, FIIs invested very heavily, and it turned out to be the what we call not so great the price movement. So let me show you example. So I was talking about Brightcom, which has invested very heavily. They have invested. See, I'll show you one example. Can you look at this YTD gain of Brightcom? 64% down. What is the decline? 64%. And this is the same company. Okay, let me just take you that. Can you see Brightcom? They've increased substantially. They stake increased by 10 percentage point. It's not. If they were holding 10%, they increased stake went to 20%. That way, they've increased by 10%. Has the price gone up? The answer is no. So, in fact, on the contrary, Brightcom has gone down. So, sometimes, we basically carried away. Okay, FII ने उसमें लिया, let go and buy. But that's not the right way it's going to happen. That's no guarantee that you will make money. Another classical example. We always try to chase one big individual investors. Let me show restaurant brands, where the FIIs have also increased the stake. Can you see this? 27% down YTD. Okay. Now, very big investor also the same logic. So, sometimes, there is a one big investor everyone wants to follow this. Suppose if there is a news that big Indian investors invest in one particular company, the price goes up. But have you observed over a period of time that companies underperform very significantly? So there is no guarantee that one particular investor you chase is going to result into a capital appreciation for you. Please don't do that. You should invest fully knowing what that company does, and do you believe that because his or her risk appetite of that big investor is a little different than your risk appetite. And if you try to follow that, I'm afraid more often than not, you will lose money. And you people can relate to it, what I'm trying to suggest and indicate.
Okay, moving for this next question by Mr. Rajiv Paul. He says, FIIs are selling relentlessly since last 9 months. But on the other hand, DIIs are buying, and to a certain extent also retail investors. Hence, there is some sort of balance which is maintained in the market. Who are these DIIs who have been buying recently? Do you have any idea on that?
So I think one is that definitely that EPFO fund that goes into, that is one reason. Second thing, investors, like many investors, are putting SIP in the mutual fund, and that's happening. So that's money coming in. Insurance companies are getting more premium, and by nature they would put more money into the market. And retail investors like you and me who are directly investing in the market, and hence that's happening. So I think there's a bunch of institutional investors and as well as retail investors who are putting money and acting as a shock absorber against the FII selling.
Okay, this next question by one of the attendees, Mahi, is asked, when they come back to India, will they come back in the same quantum, or will they go to other markets which have cheaper valuations than India?
No, so my sense is that they will come back to India with the strong bounce back. And the reason I said why they will come to India, because of strong economic growth. India would be the only bright star in the gloom and doom scenario. The one big problem that India is facing is crude oil. I think that should subside. India Inc. has been reporting a very strong earnings growth, and due to that, the valuations have become very compelling, and hence they will come back to India. And these are the reasons. So, of course, I'm not saying they will not go to other markets. They can go to other markets, but India will get its fair share of allocation from this FIIs. And hence, I'm very sure that 1 lakh, despite 1 lakh they've already sold in FY 2023, I do believe that India will have a net positive FI inflows in FY 2023. See, right now it doesn't look like, because we are all a little fearful and we are all suffer from recency bias. The moment we remove that, and then we will be able to see why we should remove our recency bias and look at in a practical manner, they should come and invest very heavily.
Okay, I'll move on to the next question. One of the attendees has asked, exactly on which particular months are FIIs coming? Do you have any idea on that?
Wish, sir, I had that kind of a insight. It's very difficult to read, but I do believe that by September, October, I think this should be very net aggressive in next couple of months. So I maintain, again, I repeat, and maybe if you wish, you can record that. So in case if I prove wrong, you can always take me and say, this is what Sunil, you had said that. I do believe that FIIs are in the last phase of heavy selling. In next couple of months, they will turn extremely positive on Indian market, and they will start investing in a very aggressive manner. I again repeat, in FY 2023, FII would have been net buyers, not net sellers.
Okay, Mr. Sunil, before I move on, there are quite a few investors who asked for the model portfolio and the optimizer package along with the 1499 plan. If you don't mind, can I drop the 1999 offer as well?
Yes, Jason, if you have the link ready, please drop. So only difference between 14,999 and 19,999 is that in 14,999, which is for 27 months, you don't get model portfolio and portfolio optimizer. In 19,999, you do get model portfolio and portfolio optimizer. Yes, you can do that.
Okay, I'll just stop the link and move on to this next question. Yeah, this is by Mr. Captain Kawat. He says, great presentation as always. I just wondered if so much money has left the emerging markets, presumably to invest in the US market, then why is the US market falling?
Because the US market also some domestic investors also, am I right? And they are selling because of concerns on inflation and so on and so forth. So that's why it's falling. So FI is one of the players in US market, but there are domestic investors also, am I right? And they are seems to be selling, and that's the reason you see a substantial fall, and especially in the growth stocks, like likes of Facebook. In fact, other day I was discussing that last 4 years, Facebook has given zero returns. Last 4 years, Facebook has given zero returns to the investors. So purely because of the heavy selling from the local investors there.
Okay, this question by Mr. Gaurav. He's asked actually, Jason, please pick this tough question also. He says it would be.
Jason, this is a ploy, to force you to pick. Please take. See,
Yeah.
I would love you to, ask intelligent question that really makes this webinar very nice place, to have. So yeah, please go ahead. Gaurav ka question lijiye.
He says it would be interesting to see that ETF investments are from which country? Is it more from US, Europe, or the Gulf? Also, does it make means if US is going to go into recession, and similar story with Europe, plus the rate hikes forcing liquidity crunch, do you still feel people will invest in these ETFs very soon again?
It's a very good question. So I think the highest amount, it's not part of my presentation, unfortunately, but the highest amount of ETF comes from the US, followed by Mauritius in India. And Europe, often off the cuff, I don't have the data, so I'll not be able to. But US is the largest in terms of flow of money coming from the FPI, followed by Mauritius. Now, your point is that if people don't have savings, will they put money into ETF, which in turn can come to the market? So if you look at the India, in terms of whatever the money that is being managed globally, total investment is 45 lakh crore in India from FII. And hence, we are not that big that in the global total inflow that is available floating around of the FI money globally. Unfortunately, I was trying to research this data on the Bloomberg also, that what is the total FI investment across the world. The way we have India, US, and this one, but somehow I could not get the data. Maybe, but my sense is that it's a very minuscule. Now, whatever selling has to happen is already over. So there are two things. Okay, there are three possibilities. Number one possibility is that because of redemption pressure in ETF, FI will keep selling. That's a possibility number one. Possibility number two is that whatever the redemption pressure which was there is subside, and there is no redemption pressure, so they stop selling. And hence, no negative. The third is that they get the inflow, and hence they start buying in this one. What I'm getting a sense right now that the redemption pressure which was there in ETF has subsided. So I don't think whatever has to happen is already done. It's already there in the price, is already there in the FI outflow. The two possibilities that they don't stop selling. I mean, there is no redemption pressure. And the brighter side is that they start putting more money in the ETF, and that money comes to the emerging markets, and India being a part of emerging markets come to this. So my sense is that I believe, Gaurav, that they will be more towards the third option where they will put money, because see, ultimately, how do we fight the inflation? Can you fight the inflation with the debt market? The answer is no. To fight the inflation, you need to be in assets class which give you more returns as compared to the inflation. And that can only be possible with the equity as an assets class. Today, if you look at very classical case, okay, you look at as an investor, and you being an Indian investor, just look at it. What is the inflation in India? In excess of 8%, 7%, in excess of 7%. What is the fixed deposit offering you? 6.5%. So are you betting the inflation, the fixed income instrument? The answer is no. Crypto was another. And see, remember, there's one more thing we must all understand. crypto also played a very big role in terms of this redemption. So many of these FI investors, ETF, they had also invested in crypto. And when the crypto started falling, they will be forced to create liquidity to make good those losses on the crypto. Now that is also, I believe seems to be. So now the fresh money is not going to crypto. And as an investor, you had a choice. Should I put money in crypto market or should I put money in emerging markets? Now crypto is no longer an option. And hence, the larger chunk will come to the emerging markets, and that will make, and that will, India being a part of emerging market, that money will also further come in. So I believe India will receive a lot of flow. I hope if that answers your question, Gaurav.
Okay, Mr. Sunil, you've said a couple of times that India would be a major share of emerging opportunities. But this particular question by Abhijit, he says Vietnam, Indonesia, and Mexico are also equally attractive investment market for FIs. Hence, the Indian investments could be shared across these emerging opportunities. What's your opinion?
Yes, it could possible. What you're saying is very much true, sir. I'm not denying that fact. What I'm saying is a little different, sir. What I'm saying is that, and see, remember how much they can absorb. See, we need to also understand that these markets that you talked about, can they absorb larger sum? The answer is no. They cannot absorb the larger funds. Am I right? They're smaller markets, and the big money will have to come to the country like India. Vietnam is a very small market. I don't often remember, but they will be very small market as compared to India in terms of the size.
Okay, I'll move on to the next particular question. This is by Nipun Patankar. He says, would Markets Mojo tweak its IP to track the FI's stock-specific buying?
So in our IP, we look at the institutional holding, whether it's increasing or decreasing. And when we run the CFT score, we do look at the FI or the institutional investor increase or decreasing the stake. So you do get a point. But due to that, is it going to change the view on the company? The answer is no. So we do keep a track of it. See, beauty with Markets Mojo is that no single factor basically can make company good or bad based on because we have put a lot of checks and balances to ensure that because of one factor, the company should not become good or bad. So yes, we do consider, but we have put checks and balance that way. Now, can I just take one question which has come from, I don't know who the gentleman is, Avi, it's a male or female, so I don't know. My aggressive portfolio is down in 11 months. And how much should be given portfolio so that it can start outperforming? You keep saying that market drawdown is less than the market, then why my portfolio down this much compared to the market? Very fair question. I must tell you that Markets Mojo IP tends to underperform when the market is volatile, which we are, am I right? But when the market stabilizes, we outperform significantly. I was talking to one Mojo Infinity customers yesterday. I don't know that gentleman is attending this webinar or not. And he said, Sunil, I had invested in Power Mojo Infinity. My portfolio was down 12% on 28th June. On 21st June, it was only down by 6%. He said in one day, my portfolio has gone up by 6%. It's recovered 6% underperformance. The market has not gone up by 6%. So Aviji, my request to you, please have patience. We tend to outperform very significantly when market is stable. We tend to underperform when the market is volatile. I have gone on the record saying that, and if you remember, Avi, we have been saying since beginning of 2022 that Nifty 50 can touch 15,000 to 15,500. We do believe that market will remain volatile in the month of till July or August or August, September, and post-October market should stabilize. And if that happens, your portfolio will start outperforming. Not only will recover whatever the underperformance that we have seen, but we are very confident it will outperform. Having said that, remember, the equity market always gives non-linear returns. Equities should always look at 3 to 5 years as an asset class. You should never come to conclusion based on 10 to 11 months performance. Both on the positive side also, and also on the negative side. I hope that gives you that comfort level. Yeah, over to you. Sorry, Jason, I picked up that.
Yeah, sure. I'll move on to this next question. I think a couple of investors have made this point on China. They said that you've not provided the data properly on China. Wasn't the data not available?
Unfortunately, yes, you are right. I did not. I don't have the data on China FII market. How but they've been informed. When I was reading one article from EPFR, that basically they track, and I've been informed that China, there seems to be some inflow in Chinese market. That's what my understanding is in the equity market. That's what my understanding. When I could be, that's what my memory shows me. But unfortunately, I don't have a very data which I could have put in a tabular format, which can help you to understand what has been happened with the China. But let me just 1 second, let me just find out, because that I do get an email from Cameron every time, and he did. Wait, 1 second, Jason, just let me search. Since you people are asking, it's my duty that I must now give you the answer. So I think China has received an inflow. They also received inflow from the global equity funds also, and global emerging markets also. So I think China has received an inflow. Yes.
I'll move on to this next question by Dr. Prakant. He says, it is without a doubt that 90% of the people here are losing money this year. I would consider this to be the darkest hour of investing. Some people are planning to retire soon and see their portfolio shrinking. However, some people like me who recently retired are also seeing their portfolio shrinking. It's not a good experience. What would be the best way out here?
Sir, remain very calm and composed. Not to get too much. See, as I told you, equity market doesn't give a return in the linear fashion. Okay, it will always give you non-linear returns. So don't come to conclusion because right now you are fearful, you are emotional, and that should not be the right way. You should never get emotional about equity investment. You should remain calm and composed. The way we have seen market correcting, बुरे दिन के बाद अच्छे दिन भी आएंगे सर. So you don't have to come to conclusion based, and this is not the time to get out of the market. In fact, I've been requesting all of you, please put additional fund if you have. Don't borrow. Don't bring any money which you need for next 3 to 5 years. Okay, and don't bring any emergency funds to the equity market. If you three conditions are being met and you have funds, please increase allocations. I can tell you with confidence, sir, you will make a statement in June 2023. Good, you advise us. We did not move out of the equity market in a panic, and we made money. So, sir, remain calm and composed. Market will give you good returns. That's what my promise to you. And if market does well, markets mojo IP tends to outperform during stable market conditions.
Mr. Sunil, you're getting a lot of suggestions on if you could do a webinar on the weakening of rupee, if you could share some insights of that on a presentation on that.
Yes, we will do that. But our in-house view is that rupee will touch 80 by August 2022. So I will just give you my view. Rupee can touch to 80 rupees by August 2022.
Okay, I'll move to the next question by Mr. Bharat Oza. He says, can I say that looking at Sensex fall is currently wrong, since the fall in individual scripts nowadays are more alarming?
You're right. So that's what happens. See, sometimes, the classical example, I think on Monday, the index was in green, if my memory serves me right. But overall market, the mini scripts has fallen by 12% and 13%. So sometimes, you think, why my index has not fallen so much, but why my portfolio has fallen subtly? Because of this undercurrent. So you should always look at advanced decline ratio. In YTD, 90% of the companies are at lower level than what they were at the end of 2021. And that gives you an idea how market has been completely fallen much higher than the indices. Let me take one question from Payal. So Nil sir, I request you to please help and do the needful to improve the support and the feedback section of Market Mojo. Yes, we are working on that, ma'am, and very soon we will do that. The second leg of our question, many times questions are not picked up in webinars. I am picking up your question, ma'am. I posted many questions on the feedback section of the website, but mostly receive replies from support sometime more than 7 to 8 days later. No one answers the phone. This is very disappointing, and there is no way to talking to anyone from Markets Mojo. I am left in the dark without any. Can you please help? Yes, ma'am. Please tell me what is your query. I'll address personally here. So Jason, just please pick Payal's question. I would love to pick up that question right now only. Yeah.
Okay, I'll make a note of that. I'll move on to the next question by Mr. Kalpesh. He says, is it a good time to hunt for beaten stocks since you only follow growth stocks?
Sir, you should do that. I'm not saying no, but there's a reason to buy that company should be very strong. Not because the company has fallen substantially. You should look at those companies whose fundamentals are continuously remain strong. The price is corrected because of the poor market sentiment, and it does offers an opportunity to attractive. But sometimes, the story may have undergone change. Like for some of the banking stocks, the story may have undergone change. And if you still buy, then it doesn't make sense because the story is over. So don't try to catch the falling knife. But yes, the story is intact and the price has become attractive. Please go ahead and buy. Has Payal has put a question?
No, I'll just pick it up once you listen.
Ma'am, please put it. I'm promising you I'll take up your question.
Okay, this question by Mr. Milind. He's saying when you compare past 20 years FIIs, there are net sellers, but still there is some 18% stake that they have in Indian markets. So why they are not still selling their remaining stake? And on what basis will they not sell, since they already know that the last 3 quarters India has shown good quarterly performance? Despite of this, they are net sellers. Could you provide your opinion on this?
No. Just repeat. I got confused with the question the way you asked me.
Yeah, I think this question is a bit confusing, but he says when you compare the past 20 years, FIIs have been net sellers heavily, but there is still some 18.2% stake they have in the Indian markets. So why are they not still selling the remaining stake?
So why do you want them to sell the stake? See, in no market, FI will be net zero. Am I right? Unless there is drastically something wrong with India. Why would they do it? And as I told you, 24% of that money that comes in is a long only. They will not sell. And remember, each ETF also has certain weightage of India's country-specific weightage. They will be supposed to maintain that weightage in their this one. So they can go maybe 100 bips here and there, but they will not. So, sir, no country that will be zero. They were having something and they'll become zero. I don't know, sir. If that's what your question, definitely that cannot happen.
Okay, I'll just pick this one particular question. This is by Mr. Abhijit. I think he's dropped it a number of times in the past few webinars. I'll not be able to pick it up. He says, I am a 10-year Mojo professional member. My sole portfolio is currently down minus 22%. That's 11% more than BSE 500. Well, I understand the market has been volatile and very choppy, but still we always discuss about backtesting of IP when it comes to drawdown. Furthermore, what's concerning is that so far I have booked loss from 6 to 10 stocks of the first lot, and today booked some 33% loss from a stock which was suggested from the first lot, and not a single stock in green. I think I am the unlucky one. Still, I would like you to request to check my sole portfolio.
Yeah, unlucky, lucky. So, see, that's what I'm saying. You're all getting emotional when the market is down. So my own portfolio is down substantially. Am I getting emotionally depressed? The answer is no. I've seen worse than this. You scan around and say, look at what is the leading AMC's performance has been scheme mutual fund. They're substantially down. If you look at some of the leading PMS, they're substantially down. And that's what happens when the market takes a beating. The company tends to fall much. So no company can fall. The index will not fall by 10%. Am I right? But companies do fall by 10%. We have seen company like Tata Steel falling by 10%, Vedanta falling by 10%. They are part of Nifty 50. But has index fallen 10% a day? Of course, it has happened, but very rarely that happens. Am I right? So don't then try to compare, because in that performance we should not look at on a 3 months or 6 months. That performance we should look at over a longer period of time. And once you do that, you will realize how wealth creation happen over a longer period of time. So please, my request to all of you with folded hands, have patience. Don't get too much emotional. Market is playing emotional game with you. Don't get carried away. Remain patient, calm, and composed, and your portfolio will do well, provided you follow in a disciplined manner. Patience and discipline are two virtues each and every investor should have. If you lack either one, I'm afraid you will not make money. There are many investors who have invested in last one decade. In last one decade, equity market did extremely well. Did you make that money? You did not make money because you lacked two things: the discipline and the patience. And that's what actually happened. Now, I must take this question because Payal has put it. I'm an Infinity Power professional, but I have been attending to webinar regularly in the webinar Sunday. When you mentioned that the third tranche of this would be received by the email to prepone it, benchmark it down to 10%. But yesterday's webinar, Mohit said it is not the case. No, I think no, that's definitely the case. I think Mohit would have not understood the question right. So Payal, if between the any tranche, between first and second or second and third tranche, if the benchmark has fallen more than 10%, we would prepone that tranche. So I am not very sure. Jason, just please jot down the email ID of Payal, and we'll definitely look at it. No, I think Mohit may not have understood your question, and hence, or maybe Mohit must have given answer in some different context, and there could be some miscommunication, but it's definitely not the case. Yes, it will get triggered 10%.
Okay, I'll just make note of the email ID. And yes, let's with the Q&A session today.
Sorry, Jason.
That's with the Q&A session today.
Okay, so once again, thanks a lot, everyone, taking time out. I have you completely explain you how FI is likely to behave. Please jot it down. And as I told you, I'm very confident FI will come back very strongly. I do believe that market will soon a bottom and it will start stabilizing from and start inching up from October 2022. We are in a very last phase of the uncertainty. And hence, don't lose heart, don't lose patience. Itna sahan kiya hai aur 3 mahina kar lo, mere bhai. And then enjoy the upside. Okay. So after every rainy season, there is a bright sunshine. Am I right? After this dusk, there is a dawn, and that's going to happen. So don't lose heart, remain committed, remain focused, and equity will create a lot of wealth for all of us. With this, just a gentle reminder, we are celebrating our 7th anniversary, 14,999 for 27 months. I request everyone to participate in that and start enjoying all the powerful features of Markets Mojo. Over to you, Jason.
Yes, I've brought the link for the offer in the chat box. We also have a webinar tomorrow at around 7:30 p.m. where our CIO would be explaining how booking losses at the right time would actually enhance your portfolio returns. The invites will be shortly sent to each and every one of you. Looking forward to seeing you all come for the event.